we're in the zone where ahead of the US general election, we tend to see liquidity pick up. Janet Yellen tends to drain the Treasury, tend to drain the Treasury general account a bit because they've just taken the money in from tax season. We've got potential intervention. I was talking about this with Ovi and Mando earlier on Rect Vision. Chance that they intervene by selling dollars, that will bring dollars into the system. There's lots of liquidity, rate cuts, all of these things to come. So we're coming into the liquidity cycle. The seasonality of this in crypto tends to be strong into about August, September. Then it goes choppy because of election, because nobody knows where it's going to go, what it's going to mean, and then tends to resolve itself after the election with the extended banana zone.
Anticipation is rising amidst the ongoing cryptocurrency bull market as investors look forward to what 2024 holds for crypto asset prices. Following the approval of several spot Bitcoin ETFs by the U.S. Securities and Exchange Commission in January, institutional interest surged, with hedge funds, pension funds, and insurance companies showing strong demand for these new products. This influx of institutional capital initially fueled expectations of continued price surges in the bull market. Bitcoin indeed surged between mid-January and March, hitting a high of $69,000 and subsequently reaching new peaks around $77,000 by mid-March. However, since then, market sentiment has cooled, and despite recent price movements, there has been a general decline in investor optimism among crypto enthusiasts. Despite the current market conditions, Real Vision founder and CEO Raoul remains bullish on crypto asset prices for 2024 and beyond. In a recent discussion with Julian B., head of macro research at Global Macro Investor, Powell highlighted ongoing macroeconomic developments and their potential impact on the crypto sector. Powell emphasized the significance of the banana zone, a period typically marked by significant price increases in crypto bull markets. He anticipates a transition from the current macro and crypto spring to a more robust summer phase between now and September. Powell predicts strong recoveries in crypto prices leading up to this transition, with a brief period of consolidation likely between September and November due to market uncertainties surrounding upcoming elections. However, he foresees a strong resurgence moving into fall, expecting substantial gains for cryptocurrencies and the broader digital assets space.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Andrew Coulson, do you think institutional participation in crypto will alter the characteristics of the banana zone, tempering or exaggerating the cycle extremes? Look, the larger crypto gets as a space, the larger the number of investors that need to come into it to increase it. It's a percentages game. So it's a $2.5 trillion space. If you bring in $250 billion, that's a 10% increase in net money in. Sure, it moves it. But that's the same as if it was a $250 billion space and you brought in $25 billion. So I don't think the institutions change it, but it does mean that there is general acceptance that this is an investable asset class, so it brings in more people. So I think it's not the institutional flows per se, but more people. Now, the question is do we get a blow off top at the end of this cycle? That is definitely possible. It just depends how the cycle plays out, what liquidity does, and if people lose their minds. It's animal spirits that creates a bubble. It's generally not the business cycle that does it. It generally decouples from a business cycle if there is a bubble at the end of it. And we just can't know. The one thing that may change the market somewhat is if when options start trading on the CBOE, we'll have to wait and see whether, or the CME or whatever, we'll have to wait and see what that does. My view is we have been consolidating for 3 months, and the work that Julian and I have done suggests that the next move is higher. Julian mentioned we're in macro summer environment, which I understand is an environment of rising growth and inflation. It's the rate of change of inflation. It's the second derivative is one thing you need to understand. However, I'm struggling to understand how this can be, as most countries, including the US, still has an ISM less than 50. So it's still shrinking, although improving.
So no, I mean, if you look at over the last 6 months, and I would encourage you and everyone, as I say, we just published the latest MIT report an hour ago or so, and I talk a lot about unemployment and PMIs. So, 60, I think it's closer to 80% of PMIs are on a 6-month basis are up, and over 50% of them are back in expansion territory. So, that's not true. And also when you look at China, China's been above 50 for quite a while now, as has Germany, as has Sweden. And actually, when I talk about Sweden, and I put a chart in there on this. Sweden's one of my favorite ones to track, and I've written quite extensively about this in GMI, and it's largely because it's just a small export-oriented country, which means that when the business cycle starts to improve, Sweden's one of the countries where you see it first. And the chart that's really bonkers in the latest MIT update is when you look at Sweden PMI new orders to inventories versus the ISM, which of course would be more leading versus the ISM because of the dynamics I just mentioned, and it's gone nowhere but up. And the other thing I'm going to say is with the global PMI in May, so we're still awaiting all the PMIs now, right, for June, but the global PMI accelerated to the fastest pace in over 12 months in May. So the cycle is improving. It's just some macro is sometimes like watching paint dry. It can be a very slow moving process.
Pal's Banana Zone thesis hinges on the cyclical nature of global liquidity, particularly focusing on the expansionary phases of central bank balance sheets. He asserts that we are nearing one of these phases, as liquidity conditions have bottomed out and are poised to rise rapidly. Pal expects this trend to continue until peaking around June 2025. A key indicator he uses to gauge shifting liquidity is the Purchasing Managers Index, which surveys business conditions globally. Pal suggests that PMI data, which typically lags behind economic activity by a few months, indicates that manufacturing activities are improving worldwide. This improvement is expected to boost asset prices soon. Recent data from the S&P Global Purchasing Managers Index shows that manufacturing activities surged in May across most developed economies. Over 40% of global manufacturing PMIs are now in expansion, nearly double the 25% recorded earlier in the year. Notably, May marked the strongest month for manufacturing in the United States since the beginning of 2023, while the United Kingdom reached its highest level since July 2022. Japan also entered expansion territory for the first time in almost a year. Pal and B foresee further improvements in June, underscoring the resilience of these economies despite recent global challenges. Pal believes this economic resilience will persist, bolstered by central banks' proactive measures to support stability. He asserts that central banks are committed to intervening swiftly at any sign of economic strain, ensuring continued support for financial markets.
If we're talking about public debt in the US, we know that at least out until 2030, the only solution is more cowbell, right? Meaning more liquidity. So what's going on is the Fed is just debasing their currencies because of demographics, and then debt growth. So public debt growth in excess of GDP just gets monetized. And that is the everything code, in fact. And so long as that is happening, I think it's very difficult to have a currency crisis. And then Raoul and I are of the view that post 2030, maybe it comes a little bit early, but then productivity starts to rise. That solves the trend rate of GDP. Then central banks can step back, and then debt levels should at least come down, I suspect. But I don't think there's a high probability for a currency crisis within the current setup. Raoul, what do you think?
Well, a currency crisis of whom against what?
True.
The currency crisis, if there was a currency crisis on a globalized level, that's a debasement of fiat currency, which drives up asset prices. Are you likely to see the euro have a currency crisis? I doubt it. Will it weaken, strengthen over time? Yes, it's going to move around. Is the US dollar going to have a currency crisis? Almost impossible because of the dollar shortage. So I don't see currency crisis. Yes, when you get to recession, you will see breakages like we're seeing with dollar yen. You can see it somewhere else. That's a dollar shortage issue. So I don't see that. In fact, anything currency related tends to be good for equities if it includes liquidity, as Julian said, more cowbell. If the odds of a recession increase for some reason, or the Fed are cutting rates, you're going to see more liquidity come into the system because they've been given the green light to do so. So these things are positive, not negative. I know everyone fears the recession word. Don't forget the last time around it happened, it was because of COVID.
Yeah.
Right before that, we haven't had a recession since 2008. And arguably, we wouldn't have had a recession if we didn't have COVID. So everyone remembers COVID, recession, stocks fell. In this environment, it's highly unlikely because we have the cowbell to debase the currency that pushes up asset prices. So the slower the economy is, the more the probability of more cowbell, more liquidity comes into. I don't believe that we will be looking for a recession in the next 2026 down cycle. So we will more likely to see withdrawal liquidity, and markets like the NASDAQ may be trading down 20%, which to me is a sideways market, as opposed to the down 30, down 40% that we saw in 2022, which was driven by this inflation pulse. So it's kind of a pause that refreshes that may go on for a year before the next leg higher, which gives me a probability that we may end up with a full bubble cycle going into 2030, but we'll have to wait and see.
As central banks begin to lower interest rates and ease their quantitative tightening policies, Raoul predicts an upcoming vibrant period for the cryptocurrency market. He anticipates crypto asset prices to surge dramatically, potentially going bananas. This period, dubbed the banana zone by is expected to commence imminently. Unlike others, expresses significant optimism about the US and global economies, attributing his confidence to central banks' readiness to intervene in times of economic strain. According to these interventions are crucial in preventing another global financial crisis, with periodic money printing being the primary tool to stave off economic downturns. Forecasts this cycle to persist until at least 2030, envisioning a transformative era with advancements in AI and robotics reshaping the world. Until then, he suggests that investing in cryptocurrencies like Bitcoin and Ethereum could safeguard against currency devaluation and debasement. Do you share Raoul's analysis and expectations for the cryptocurrency market in 2024 and beyond? Feel free to share your thoughts, comments, and observations below. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.